Now let's finish it with environmental accounting. That's the last part of section B of the syllabus. So the question is, how we want to know how company activities, or actions are affecting the climate, or you'd say the environment. We want to know. Because when we know, then we need to start thinking, what is the impact on the company itself? Because if we know this, then we'll be aware of what are the costs that can be related to those impacts. So when we know those activities that are affecting the environment, then there will be awareness of the environmental related costs. Environmental related cost. And guess what? When we have that awareness of that cost, what do we want to do with it, with that cost? Guess. We want to minimize it. Once we know it, the next thing is we minimize. Remember, that is one of your major objectives as a minor accountant. You need to be able to control cost. You need to be able to optimize cost. But you cannot optimize what you don't know. As you can see, that's exactly what we're talking about a few minutes ago, that you cannot control what you don't know. But once you know it, then the awareness comes to you, then you are doing everything possible to bring that cost down, if you cannot even avoid it, right? So see where we are coming from. We said sustainability is a global objective. Yeah. And we are global citizens. Whether you're a company or individual, your impact is contributing to this objective in one way or the other, either destroying the objective or adding positively to the objective. Therefore, we need to know how our companies are also contributing to that objective. Once we know, then we know what part of our business is creating cost. And once we know, we can now minimize that cost. This cost that we're talking about can either be financial or non-financial. And let's think about it. What are examples of financial costs that are related to environment? Think about it.
Fines for non-compliance.
Exactly. It can be fines, probably for pollution or for non-compliance with environmental regulations. If you have garbage all over the streets in front of your office, then you can be fined for that. Or even you spending money to take care of your rubbish, garbage, and everything is environmental cost. Because you're trying to keep the environment clean. And trying to do that, you're incurring cost. Right? What about non-financial? Financial is always very easy and obvious. What about non-financial?
PR, like public
PR, yeah.
relations.
PR, when you say PR, a lot of people might not get that. What you mean is public relations, which is talking about your image.
Yes.
Yeah. Your reputation. If you don't take care of the environment, you might have bad reputation. And bad reputation is big enough for you to go out of business, because You can have pressure group just coming for you and say nobody should buy your product because your product is this, is that, it's causing global warming, it's causing pollution, and that will be the end of your company. So the PR is quite important. Yeah. So, I mean, broadly speaking, those are the two major groups of costs that you can say, okay, your environmental cost can be. However, there are different categories where you can put this cost. Different categories, and that's what I want to touch on now. The first category that I'm going to touch on is your conventional, which is the easiest one, your conventional cost. Yeah. And when you're talking of conventional cost, pretty the easy ones. I mean, from the word conventional, I think it rings a bell as well. Let you see that these are the real pollutions, the obvious ones that you don't need to think too much to know that this is environmental related cost. Yeah, and usually comes from your inputs. Yeah, what you normally use during your production. What are your inputs? Either you are using materials, so you can have waste from your materials. Probably maybe it's damaged products or even some materials that you did not use or that are not usable. Yeah, they can pollute the environment. Yeah, even your energy consumption. That is why you're always advised to put off the lights and machines when you are done using them. So you don't just keep running electricity because every time you run electricity, there is emission. Yeah. And likewise, even fines from pollution, like Usman told us. Fines, yeah. Those are the obvious costs related to environment, and they are called conventional costs. Yeah, very visible. Yeah, these ones are quite very visible. You can easily tell. Yeah, materials can be maybe due to waste, might even be coming from their packaging, plastics. You go to Walmart, you buy things, they give you plastic bag. You're done using the content in the plastic bag. What about the plastic bag? Where did you put it? Good. When you went out today to shop, where are the plastic bags? Don't talk. I'm just joking. You go. Yeah, those packaging plastics. Conventional costs. So easy. They're not eating. They're very obvious to see. The second category, and that's called the potentially eating cost. Potentially eating cost. This one's very, very difficult to see. So generally speaking, this one's not obvious. And why? Because usually this will happen when you are doing normal activities and you're paying for that activity, whereas other things are going on in addition to that. Let me give you an example. Many staff, many employees. If you think about this, you will wonder, what has having many staff got to do with environmental costs? Can you think, anyone?
So I think it could be like transport, like when they are going to
Exactly.
work.
Exactly. You see that it's not obvious to everybody. Because when you have so many staff and all of them transporting themselves to the office, either driving or whatever it is, they are emitting their activity, their carbon footprint is out of this world. Even if they have computer, their computers are using power, emitting radiations and all of that. So that is why it's not always obvious. Another one is excessive use of energy. If you're using power a lot, you think, yeah, it's overhead. Anyway, it's overhead, but it's beyond overhead. It's beyond power cost. It's beyond utility. The emissions are there coming out from unnecessary use of power. So it's not obvious because your many staff will be your staff cost. So you will never think of environment. Your excessive use of energy will be your overhead. You would never think of pollution. You would never think of environment. Whereas you are impacting the environment. You see, these are not very obvious, and that's why that group is called the potentially hidden cost. The third group is your contingent cost. When you are talking about PM now as a contingent cost, environmental cost, it means that there must be an action for this to be a cost to us. And that is why you'll be seeing things like cleanup. Yeah, because cleanup cost is also called the decommissioning, depending on what you are used to, the commissioning cost. This type of cost is not for everybody. There has to be an action for you to have this kind of cost. And that action is you probably must have destroyed the environment. So it's not common to everybody. The way your power, your transport, everybody will do transport, everybody will use power, everybody will have material, yeah, that might be polluting the environment. However, this particular one is only contingent on the nature of your business. So if you're in that type of business where environment is being destroyed, you will have to clean it up. But if you don't destroy the environment, nothing. You don't have such cost. I hope it's clear and you're able to distinguish between those types of costs. Very important. I need you to be clear. I don't want you to memorize anything. And that's why I spend time explaining. The last one, the last type of cost I'm going to talk about here is the image cost. And this is just the cost that Kesha told us about. An example of non-financial cost is image cost. Yeah, this is usually intangible in nature. Let me put it like that. It's about your reputation, so it's intangible. Yeah, and has to do with your reputation. Whether you are seen to be environmentally responsible or irresponsible. Because there are companies that are very responsible and there are companies that are very irresponsible. And once you are tagged to be irresponsible, you're already destroying your brand. You are destroying your identity. You are destroying your reputation. And can get to a point whereby customers might start to boycott your product because you have a bad image. And that might cost you your existence. What are the benefits? If you're doing environmental management accounting, remember, when you do it, you are going to have awareness and knowledge of how your activities are impacting your environment. And what does that help you to do?
Better prepare for that.
Better prepare. In what sense?
Make informed
With
decisions.
cost, I guess.
Exactly. You're going to make better decisions. Yeah. And what does that mean? It means that you're going to act in accordance with laws and regulations because you don't want to just pollute the environment. So compliance is number one. You don't want to pay fines. So compliance. Because remember, once you can see it, you can control it. So it helps you to comply. Likewise, because you know that you are causing damage to the environment from your waste, what do you try to do? You reduce waste. And when you reduce waste, what happens to your cost financially? So what happens eventually is you save costs. You reduce your waste, which means you reduce your impact on the environment, and at the same time, you are reducing your costs. So much benefit for you. What else? Good image, because you are aware of that image cost. And because of that, you want to avoid it. While you are avoiding it, you are creating a good image for yourself.
So you can also use that good image to attract customers, right?
Exactly. You have good image. Like I know people that don't buy shares from companies that are not environmentally responsible. I'm not a green investor, but we have green investors like that don't want to buy shares in any companies that are not responsible environmentally. So beyond even attracting customers, even attracting investors. Now that we know all of this, we know the meaning of environmental management accounting. We know the benefit. We know different types of cost. The question is, how do we now do it? How do we do environmental management accounting? So now, how? How? How do we do it? There are about 4 methods. The first method is the input output. Call it input slash output. Some people call it outflow. We're saying the same thing. Input outflow method. And what is this talking about? This is just talking about whatever you garbage in, you have to garbage out. If you put 3 units of product of materials into the machine, the same 3 units will come out. The only thing is all 3 units might not be used in the product. Maybe 2.5 will be part of the product. Maybe 0.5 will be waste. But whatever you put in must come out. So take for instance, what I'm saying here is, let's say you have an input here, materials at 100%. You decide to process it. So it flows into your process. By the time it's coming out, you're going to have finished products. So you're going to have finished products. You might have some scrap that you don't want. You might even have some wastages. If these finished products probably used 80% of the material, the scrap can be maybe 15%. Then wastage maybe 5%. But what is important is everything will still add up to this 100% that we used. That's what input outflow. So what this method is saying is that if you understand this process, if you understand this flow, then you need to look for where your wastes are. Where are other things? Imagine if, let's say instead of 5%, if this was 1%. If it was 1%, that means you only have 96%. What does this tell you? This will now make you to investigate further. Where are the other part of this 100% materials? Maybe it's lying under the table. Maybe it's hanging in between the machine. Maybe it's somewhere. Then you have to look for the 4%. Then you will see that, definitely this is a pollution to the environment. This is a waste. Maybe I should have added this to the waste, or maybe it's others. So this brings transparency to your process and your consumption pattern. And once that happens, you are able to deal with wherever materials you have at any stage in your production. So it makes you to be able to answer the question, where is the waste? Once you don't have 100% in your output, you cannot account for the 100%, then you need to look for more waste wherever they are hanging. So this method just shows that whatever you garbage in, you must garbage out. Any question about our method before we move to the second one? The second method is a flow accounting, flow cost accounting. This one is pretty easy. What flow cost accounting is just saying is we focus on the materials. Anytime we try to reduce the material usage, so I would say let's reduce, this is saying let's reduce the use of materials. And why is it saying that? Because it believes that the less materials we use, the less pollution we will have. Because when we reduce materials, what we are saying is that, therefore, we will be able to reduce pollution coming from the materials. The question is, how do we reduce the material usage? We just need to be creative. Maybe we need to get a different type of material such that we don't need to use 1,000 units. We can be using 10 units. So we don't consume so much. We're not going to stop our production. We're not going to stop our output, but we just need to get creative with our input such that we are not using so much. Maybe there's a way we need to minimize waste during the process such that we don't require so much input. All of that, what you are doing is a flow cost accounting. Reduce the material usage and reduce the pollution. Simple. Number 3 method is ABC. The same ABC you know, is nothing different. So I don't have to explain it to you again. Yeah. But what it does is it helps you to focus. So this one focuses on number 1, environmental related costs. Yeah. And likewise, environmentally driven costs. Are these two the same or they are different? Remember, ABC is a type of technique that believes that there is no cost that's not variable. That's its own understanding. And why? Because it believes that something must drive every cost. The question is, what is driving the cost? Yeah, and you can see that is what we're talking about here, environmentally driven cost. Yeah. So when you're talking of environment-related cost, what you are just saying is that any cost that is allocated to environment cost center. So all costs that can be allocated to environment cost center. That's what you're talking about here. So you're not really, you're not interested in whether it's being driven by environment or not. Once you just think this particular cost relates to environment, it goes to that. And what kind of cost would that be? What kind of cost do you think you will incur and you will have to post it to environment cost center?
Um, Sometimes, for example, in industries like clothes manufacturing industries. So this I will give you from back home.
Okay.
They have filters that are in their chimneys for the smoke. They filter it, and those filters are changed rapidly, or there's a canal. So the water that's going into the canal, they have like really big filters for filtering that water as well. And those filters are changed rapidly. So maybe that is how they allocate, because they're
You're very spot on.
yeah.
You're very spot on. Anything you use in waste collection is environment cost center. So be it even incinerator, garbage disposal cost. If you have to pay to dispose your garbage, yeah, sewage treatment, all of that, all those kind of costs will go to environment cost center. Yeah? Or do you think you will blink twice to decide where to post this type of cost? Will you blink twice? It's not obvious that this is environment. This does you can't tie this to any product. This is just environment. We're incurring this cost because of environment. Because you don't want to hurt the environment. So it will go to cost center that is described as environment cost center. But that is different. A question or something? Someone is trying to speak?
No, like I wanted to ask, how about the labor cost for those staffs that are responsible for this garbaging and stuff like that?
Yeah.
Like, will it be related to
that will also be environment. Yeah. If you have different type of staff, maybe you call them cleaners. Do you get? Cleaners will go to environment. Do you get? So that's also correct. So easily you can see that this type of cost are meant for the environment cost center. Well, guess what? That is not the same for this guy. For this guy, number one thing you need to know is that it's not related to any specific cost center. Note that, not related to a specific cost center. So which means it might be incurred by anything in any way. But what we know for sure is that incurring this particular cost affects the environment. And you can already think about it. So, but this particular cost can also the environment. Every time we spend that cost, we are impacting the environment. So it affects environment whenever the cost goes up. So you can see the drivers. So when that cost is going up, the environment is also getting punished. And that's why something is driving something. That's why ABC is coming in, because you can pick the drivers. Something is driving something. So what kind of cost do you think when it goes up, the environmental impact might also go up? We've spoken about some of them today.
The power?
Yes. Power cost. You can see that power cost. Some might go to production cost center, some might go to corporate cost center, because you'll be using power all over the company. So it's not just one specific, but we know that when the power cost is going up, the impact on the environment will also go up. Fantastic. What else? Staff cost. Remember, we said it. When you recruit more people, they are likely going to cause more damage to the environment because of their commute, their tools, the materials, the machines they are using. Likewise, more machine hours will probably mean more emission. Yeah, because you might need to consume more energy, you might need to emit more. Yeah. The last method that I'm going to be explaining is also your friend, which is the life cycle costing. And I'm sure you can relate with this one easily. Yeah. Especially from what Gu said. Gu told us something. She said one of the rare costs that we don't pay attention to in the life of a product is the dismantling cost. And that is environment. So if you have done your life cycle properly, accounting properly, you would have identified that cost at the end. And with that, you can apply that in your environmental management accounting. So you know that in environmental management accounting, you are bringing in life cycle costing to come and help you determine how much you're going to spend to make sure that you do not cause any damage to the environment after you are done selling the product. Remember, life cycle is at every stage of life of the product. However, your major focus here is clean up the environment after you are done selling. So it's a life cycle that brings that transparency to you, trying to do your environmental management. Yeah. So I would say this one will focus on, when you're applying life cycle costing, to the later stage. Remember, end of life, later stage of product life, to prevent environmental damage. Very important. And once you prevent that, you are trying to also manage your reputation. Yeah. Yeah. Especially when you are doing exploration. Yeah. You might need to do cleanup. Yeah. And what's the benefit? The benefit is transparency of the cost. And remember, like I always say, when you can see it, you can give it attention, and you can then optimize it. Ladies and gentlemen, that is the end of section B of your syllabus.